Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for this to be the low and now continuation to the upside. In this scenario, we have then finished a 3-wave corrective structure and you want to see at least this high being taken at 32k. Now in this scenario, we then finished with a 5-wave structure here in a 1, 2, 3, 4, 5. Now all of the subwaves do reach their targets in some way. Wave 2 over here reached a 382, bit more rare for a wave 2, more common for a B or an X. Wave 4 over here reached the 05, which is a nice target for a 4. Wave 3 hit the 1.618, common target for a 3, and wave 5 hit the 1-to-1 over here. Has to be said that this wave 5 is the problem in this scenario where yes, we can count a 5-wave structure to the downside here on the lower time frames and we can move this wave 5 to the left. The problem we have then is that price made another low, and of course in the bullish scenario you want this then to be the low and continuation to the upside from this left pivot. However, that's not the case. We made this low over here and this now looks more like a 3-wave structure than a 5-wave structure, lowering the probabilities that this is a wave 5 and therefore lowering the probabilities this scenario is correct. Now on the lower time frame, if we zoom in to this structure over here, then you can see it more clearly. 1, 2, 3, 4, 5. We could end wave 5 over here. However, in a bullish scenario, you want this to be the end of this impulsive structure, the final wave 5 in a 1, 2, 3, 4, and then a wave 5, where this wave 4 is also 10 times longer in time compared to this wave 2, which is not really what you want to see, lowering the probabilities once more. If we zoom out and we look at the two more bearish scenario, then the first scenario over here on the medium time frame is a WXY, where we then have an ABC structure finished in a wave W, where wave B reached the 0.382. Again, the 0.382, common for B or X, more rare for a wave 2, so that fits nicely. A wave X over here has many targets between the 382 and the 886, taken from the high to the low over here of wave W. It already hit the 382 with this first zigzag structure to the upside, so for a wave X that is valid. However, as you can see, after hitting this wave X, we didn't really yet go down in a wave Y, unless this is a 3-wave zigzag correction and maybe something else, but at the moment there's not really something I am looking for. There is 2 low time frame scenarios instead that I want to go through, which means a wave X. These 2 scenarios are part of a wave X. The first one is a potential triangle, and this triangle was shown in the live stream yesterday and was an idea from KG. He posted this in Discord yesterday, where he's looking for that W over here, the end of C, and then a 3-wave A, then a B, C, D, and eventually E. And that results in a scenario like this, where we then have a triangle, which is called a running triangle, as wave B went below the origin of wave A. So we have a zigzag A, zigzag B, looking for then a C, D, E. Now this wave C can be more complex in a WXY. I saw John posting that in Discord as well, and that is possible because if we look at the rules, some of the waves are more complex, then it tends to be C, D, or E. Now 4 out of the 5 waves have to be zigzags. Wave C, D, or E can be more complex, and if they are more complex, especially C and D, they tend to be double zigzags or even triple zigzags, and this can be a double zigzag on the lower time frames. And wave E can, as well as C and D, can be a triangle by itself. So you can have a triangle inside a triangle. But that is more rare. More, let's say, common is that C or D becomes a double or triple zigzag if one of the waves is complex and not a zigzag. And we want to see volume decreasing. And as it stands now, volume is decreasing between the waves. Wave A over here with the highest pivot of volume. That's nice to see. Then we have B. And currently, if we look over here, yes, this is a little bit higher. But not higher than these waves over here, than these pivots or these candles to the downside. So the volume here is still moving to the downside, which is what you want to see in a triangle. Still a bit early to call, especially over here. You want to see a move to the downside now. And these lines are not just drawn randomly. We are currently at support. We have a daily over here where we are right now. If I put that on the chart, daily, as you can see over here, and also this area is a daily order block. If we go to the daily time frame, then you will see over here there's a daily order block. So there's a bit of support here. So what I've drawn is basically this as a three-wave structure, going to the target box that we have at the top for resistance between 27.1, 27.3, moving down where we then have support between 25.7 and 25.9. Now, each of the waves, D as well as E, the most common target is between the golden pocket and the 786 of the previous wave. And if this is a finished C wave, which is likely, it hit the 786, then you'd be looking for this area over here as the target for a wave B in a three-wave structure, for wave D, and then a three-wave structure to the downside. The other scenario is a flat scenario where we are looking for a three-wave A, a three-wave B, and then working on a longer C towards the upside. So we then think about an impulsive structure. Gotta say there's a lot of overlap over here, which doesn't look too brilliant, so that's something to keep in mind. But one could have a 5-wave finish structure over here for a potential wave 1, corrective structures in a wave 2, and then continuation in a 3, 4, 5. Also a bit early to call, but at least in this scenario, you want this high to be broken. And that is the difference with the triangle. This is an invalidation and this is an invalidation if price moves up or down below these levels. But with the flat, you want price to move to the upside. And if price takes the high of A, then in my opinion, we go past this resistance area. And the next area of interest is over here, which is very close to the wave C target area, just below between 29.1 and 29.4. So that is definitely an area of interest for then potentially a drop to the downside. Now the medium time frame, more impulsive, a bearish scenario is that this is all part of a wave 4. So we then have a 1, 2, 3, 4, 5. Over here you can see that the first part of wave 4 already hit the 0.5, and preferably you're not going to revisit this 0.5 in a wave 4 because then the probabilities are very high. You're going to cross this 0.5 and move towards the upside, invalidating a wave 4. The 0.5 is a maximum target for a wave 4 and has already been hit with the first structure to the upside. Now in this scenario, we then do have a longer wave 4 over here, and we'd be looking for an impulsive structure to the downside from this high over here. If we have the low time frame scenario, we then think about a zigzag in a wave W, X, and then a Y. The problem here is twofold. First of all, this wave X looks like an impulse by itself. We then have a 1, 2, 3, 4, 5 to the downside. Now I can hear you say then, okay, why don't you put this wave X to the right? And now you have a three-wave structure in potentially this being a zigzag in a W, zigzag, X, zigzag, and then Y, potentially a double zigzag. Now the problem here is that wave W and wave X are then the same pattern. They are zigzag structures, or at least both part of the zigzag family, which is not allowed in a sideways double combo WXY, where wave W and wave Y have to be different structures. If wave W is part of the zigzag family, you want wave Y to be either a flat or a triangle. So this is something we have to keep in mind. Now a flat means we have to want to see something like this, for example, and then a triangle is that we are not finished with the correction and have more sideways price action to go, which in general is of course something that might be likely because the weekend is coming up and the weekend is famous for ranges. However, we still got this Friday, we still got the markets open, so it might lead to some interesting volatility. If we go to the lower time frames and look at the local CVD divergences, by the way, if I zoom out on the 4-hour, we do have these bearish CVD divergences where the target is this low. However, the more local CVD divergences will always have priority. So if we zoom in to what is happening more locally, then over here, we had some bearish CVD divergences throughout the night. Now these already played out over here, but we also have bullish CVD divergences, higher low in price, lower low on the CVD. The target is taking these highs, which is highly probable looking at how close price is to these highs at the moment. And then we take it from there. Now, if price moves towards the upside, more on the micro time frame, as you can see, I don't really have a count at the moment on the micro, but if we look for impulsive structures to the downside, it doesn't look that amazing, right? Then you want to see a 5-wave structure to the downside. So a bit of a bounce could be very interesting, where then again, if price is going to go at least above this little range over here, I'd be looking for price to move to the upside, where then an interesting area is going to be this resistance box between 27.1 and 27.3. That is definitely an area of interest. Observe what price does over here, or it can take these highs and move one resistance area higher, 27.7, 27.9, right? If price does fall to the downside, just in case, 25.7, 25.9 is interesting. In both cases, we are still looking for price to move to the downside. We also have the double bottom over here, which is very interesting at 24K. Of course, going down does not mean doing this. It goes in waves, it takes time, and on this channel, I will update you whatever happens with the waves as I'm back from holiday, which is very nice. So I'd like to thank you for watching. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.